It's time now for our chart or charts of the day. Our very own Josh Schafer is with us. He's looking at two charts that tell us a story about tech's dominance in the market from the 4th edition of Yahoo Finance's Chartbook. Check it out. It's on Yahoo Finance's homepage here today. Josh has put a lot of hard work into this. What is it, 44 charts?
44 charts, yes.
Okay, 44
we spent the last month, Shauna, asking economists and strategists what the most important chart is for investors right now. So there's a lot of key themes you can check out.
There's a lot of key themes, and we're going to highlight two here this morning, but you definitely want to check it out because we're not even scratching the surface here. But the two charts that you have, we chose here today because it also, I think, illustrates and maybe puts an emphasis on some of the trading action that we've seen over the last 24 hours with significance.
Definitely. So the first chart I want to highlight here is from Vinu Krishna over at Barclays. And what this chart shows us is EPS revisions over the last 12 months. So that big white line you can see on your screen, that's clearly the outlier. Guess what? That's big tech, right? So that's Mag 7 minus Tesla. Tesla's not included in that. The line below that would be the S&P 500. The line below that is the rest of world. But really, guys, what I think the takeaway here is, as far as the last day of market action, look at that white line. It's just been consistently moving up. As Keith Lerner also told us in the chart book, a key pillar of this bull market has been earnings estimate revisions continuing to rise with stocks. This has been a fundamental stock market rally. But what happened yesterday? We got real questions on whether or not that white line is going to keep moving up, right? Whether a company like Nvidia is going to just keep its dominant market share and keep growing earnings at this impressive pace. And I think we got a little bit of a taste of how the market reacts. If big tech earnings are not going to keep outperforming, perhaps at an index level, it could be challenging for investors.
Wow. Okay. All right. And you had
chart two, Brad. All right, yes. Chart two.
Let's go to that one.
So the sort of the other flip side of that is there's still opportunity in this market, right? So you're looking at a chart from Richard Bernstein here, and what he's highlighting is we had a near record level of stocks outperform the S&P 500 over the last 2 years. So it was 30% of the S&P outperformed in 2023, 29% in 2024. We haven't seen the market with that little of outperformance since the late 1990s. Bernstein's point here being that's not normal. Look at the average dotted line there. Bars are normally right around that average line, if not over. He's sort of arguing for a broadening out rally sort of trade. And again, guys, going back to yesterday's market action, 70% of stocks in the S&P 500 closed in the green.
Yeah.
So there was some level of rotation. I just think the takeaway is, once more, if you're an index investor, rotation's going to be a little bit harder than the bull market we had over the last 2 years.
It's going to be harder. It's going to be rocky. It's going to be volatile. There's going to be some tougher days. I think it's easier to say at least the least. But how should investors be, I guess, a bit more confident or reassured then that we did see something like the S&P equal weight there remain relatively flat yesterday? We didn't see too much change.
I mean, it depends on what you own, right?
Yeah.
If you own the broad S&P 500 index, then sure, there's some signs of strength within the fact of how many stocks closed higher. But also, and Nvidia is not going to fall 17% every day, right?
Hopefully not.
Hopefully I'm not making a market call here, but that would be surprising to see it continue to fall, right? And that's really what dragged down the index. When you look at, it was over 2/3 of what dragged down the S&P 500 was Nvidia alone. So I do think you could look at yesterday and say, okay, little bit of concerted risk here, and maybe, or concentrated risk, I should say, and maybe the broader story hasn't changed as much. As Drew was just saying, with some of the AI names that could actually probably benefit from the launch of BT.
And the tone has very much been optimistic. I think across the board from many of the strategists, even in the wake of the selling that we saw yesterday too.
Yeah. Highly
Congrats on the chart book. Everyone's got to check it out. It's on our homepage.
Yeah.
44 charts.
Josh, appreciate it. Thanks.